Microsoft and Meta weighing on the S&P and NASDAQ under pressure despite top and bottom line beats from both names. That said, our next guest calls Meta a buy here and just raised his price target to 700 from 600, but lowering his price target on Microsoft to 425 from 475 with a neutral rating there. Gil Luria, D.A. Davidson Managing Director, joins us now. Welcome, Gil. First, if you could just kind of explain your rationale behind those two moves.
Yeah, if we were to extend the picks and shovel analogy that we've been using recently, Microsoft is selling a lot of picks and shovels, but their customers aren't necessarily finding enough gold yet to justify that. And so Azure decelerating the quarter in the face of accelerating CapEx. Meta's accelerating CapEx as well, but they're actually mining for their own gold, and they're finding it through better ad business. Their core business is doing better because AI is helping them generate better ads that are getting better yield. So Meta is already benefiting from AI and that increased investment. Microsoft still needs its customers to find some more gold.
Every quarter, of course, we talk about investors' patience with all this CapEx going into AI versus the ultimate payout. How would you describe the market mindset right now as it pertains to that clear ROI and patience levels as they see, billions of dollars get funneled into these types of projects?
Well, I think what we're seeing today is the market is running out of that patience. Is that even though the heads of these large companies, these mega caps, believe that the investment is justified because they're going to get to AGI, which will be an incredibly powerful tool, they don't want to risk not getting there. But investors want to see a shorter-term payback as well. They want to see these applications actually being successful, generating economic returns that even remotely corresponds to the level of investment that these companies are making. The market is telling these companies today, you need to slow down this CapEx rate until the revenue from these endeavors catches up.
Well, I mean, from a Microsoft standpoint, the demand is overwhelming. They have some supply constraints. I think they're pretty clear about that. So how do you factor that in? And frankly, I'm not so sure that the market is growing tired necessarily with what the spend is and what it might be, because I think we understand they have to spend to maintain their enterprise leadership in AI.
Well, they just lost a couple of points of share to Google. So that's part of the issue with Microsoft is, yes, they're accelerating the spend, but Google accelerated revenue growth by 6 points. They're going to have a deceleration over a couple of quarters of 3 points. So the narrative on Microsoft was that they had this huge lead over Google and Amazon, and now that's really changing because Google's accelerating. Amazon's going to report an acceleration in AWS today. So Microsoft is doing well, again, selling picks and shovels, but it's not doing as well as Google and Amazon right now, which is not what the narrative has been. And then in terms of the supply constraint, let's not forget Microsoft is entirely beholden to NVIDIA. All their data center chips come from NVIDIA, where Google and Amazon have more independence because they have their own chips that they can deploy. So they're not having the same supply issue that Microsoft is. Again, Microsoft is escalating the data center build out in spite of the fact that Google Cloud and AWS may have a structural advantage.
Gil, you mentioned you expect Amazon's going to report an acceleration in AWS along these lines. What's the general setup for Amazon? I mean, is it just going to trade, do you think, on the cloud momentum or other things?
Well, that's half of it. We are going to be very focused on AWS to see if there is acceleration. If they added more dollars than Azure did this quarter, that's going to be very important. The second part is going to be margins. Can they sustain and maybe even increase their retail margins in spite of all the moving pieces? Is the consumer strong enough to support the e-commerce business? And is all the investment that they've made in the distribution and fulfillment centers going to pay off with higher margins in retail? As long as they can maintain or maybe even increase retail margins, then they'll get rewarded for the acceleration at AWS.
All right, Gil, thank you very much for joining us on such an important week for these stocks. Really appreciate it.